The Fed's post-2008 gain-of-function policies have distorted markets and widened inequality. This is in a Wall Street Journal opinion piece. And he warns that they threaten its independence, urging a return to its core mandate. All eyes, of course, on inflation this week. We've got PPI out Wednesday, CPI Thursday. Thomas, what are you looking for here?
Great. Well, thanks for having me on the program. Yeah, we're really watching rates very carefully and also the reaction of the stock market. Friday was a big day. And with the 30-year getting down to a 4.77% yield and the 10-year, like you said, closer to 4%, the market doesn't seem to be worried about inflation or debt at this point, but it remains to be seen how long that can last.
You know, it's interesting, Kenny, because I was reading this opinion piece by Ken Griffin, CEO of Citadel. He wrote this in the Journal, and he talks about a risky game with the Fed. The U.S. built its economic credibility slowly over a long time. If we lose it, it won't be easy to regain. And he goes into reasons why he believes that the Fed should, of course, remain independent. I think many market strategists would say the same thing. But how much does the Fed need to bend to what President Trump is saying, Kenny?
I think they have to be very careful, right? They can't be seen as caving, because then they'll lose their credibility. But on the other hand, we do have an issue where we have the labor market weakening, which would suggest that maybe they should consider cutting rates. But Thomas, I'm looking at CPI and PPI this week, which are going to be key, because last month PPI was very, very strong. They were, the idea was that producers were not passing along to consumers. We'll find that out this week in CPI, because if we get an uptick that's unexpected in the CPI, that then puts the Fed in another difficult position.
Yeah, and the Fed is in a difficult position in this passing of the baton from inflation concerns to recession concerns, employment concerns, which can lead to recession. The bigger risk now is not inflation. If it's, a couple of tenths here, a couple of tenths there, right. I don't think we're going back to 9% inflation. No. But you have a recession and you have a much bigger problem with employment and the debt.
Right.
Well, one of the things, though, I want to point out here is that he was on Scott Bessent, was on Meet the Press yesterday, and he talked about the fact that, look, yes, we're seeing job losses, but look at all the manufacturing activity that's going to be coming, especially in Q4. He said he's very optimistic about Q4 because you're going to start to see foreign direct investment in the United States. All those trade deals, those tariff deals that we've seen that have been signed so far. Kenny, also staying with the Fed, the president did confirm now that his top three picks to replace Jay Powell are these three gentlemen right here. But let's watch.
Are the top three still then Mr.
Warsh
and Mr. Waller?
I am looking at Kevin also, and I'm looking at, I would say you could say those are the top three. Good job.
Kevin Warsh, Kevin Hassett, and, of course, Christopher Waller. So Powell's term ends in May. President Trump says he's not going to renominate him. Kenny, what do you say?
So, listen, we know that he's not going to renominate him. I think Waller is probably the one in first place. He's been very, very vocal about the rate cuts for months now. He's been out there making sure that everyone knows it. I think Hassett is in second place. I think Warsh is in the third position. But I do think if I had to place a bet, I'm going with Waller.
And, Thomas, what do you make of Ken Griffin's point that there is concern about the independence of the Fed?
Well, I think that it is important, but it's not really being reflected in rates at this point. It's been a non-event for the market. But I think this weekend's comments about the Fed's independence were really striking to me, in that everyone from the Trump administration, those three people, were saying that they want the Fed to be independent and to focus on its traditional narrow mandate of employment and inflation. And I think that that's probably pretty soothing to the market.
Interesting that you say that. Before you go, where are you putting your money right now?
Well, we're thinking it's pretty important to be diversified right now. But you want to be participating. So we have a portfolio of stocks and bonds and cash, and frankly, gold is a significant portion because of all the uncertainty, both with regard to inflation and with regard to the debt.
Interesting that you say that. Kenny, how about you? Where are you putting your money right now? What's important?
I think you have to look at industrials. I think you have to look at healthcare. It's been a way underperformer. And gold for sure. To your point, gold has been the ultimate safety trade. Once again, it's up today, kissing new highs. And I think that just gives people the sense that they're not really sure, so they need that hedge.
All right. Thomas Martin, thank you so much for being with us this morning. Really appreciate it. And, of course, Kenny, you're going to stay with us all morning long. All right.